In the 1980s, James Carse wrote a great book called Finite and Infinite Games. In this book, he talks that there are at least two kinds of games, finite and infinite. And so today I want to talk about those two concepts because all my investing focuses on infinite returns, as you guys know, just be infinite. So it's really quite simple. A finite game has a beginning, middle, and end, where an infinite game, of course, is much bigger and actually has no end. And I think you would agree, most people buy houses that way, they buy low, sell high, they buy stocks that way, they buy businesses that way, but rarely do they invest with an infinite return approach. So I like this summary right here where it says finite games are those instrumental activities from sports to politics to wars, which the participants obey rules, recognize boundaries, and announce winners and losers. The infinite game, however, there is only one. Includes any authentic interaction from touching to culture that changes rules, plays with boundaries, and exists solely for the purpose of continuing the game. Finite players seek power. The infinite one displays self-sufficient growth. So the purpose of this video is to show you the difference between finite investing and infinite investing, just like this book that James Carse wrote back in the 1980s. So the symbol on the left there, of course, that's a circle. That is what we call a finite investment. The one on the right, of course, is an infinite investment. They are very different. The infinite investment continues to return. The finite investment has a beginning, a middle, and an end. In the infinite game of business, the purpose, of course, is to be playing to be better today than we were yesterday. The joy in business is advancement, but it's infinite if you play it correctly. The objective is to keep the game in play. Just like with an investment, the objective is to keep your money in play and the game in play. What we have here are two very different philosophies, and you might be in either category. One thing we definitely know about the finite category is at the beginning, middle, and end that there's a high degree of certainty that they have to know. There's a high degree of control, and of course, there's safety inside of the rules. And that's the most important thing. But in business, the rules change. On the infinite side of the category, the safety is actually in the relationships with people. They believe that rules are just merely suggestions. On the infinite side, uncertainty actually opens more doors. On the finite side, uncertainty freaks people out. So you just have to decide which path are you going to take. A great example is a football game. A football game has 4 quarters, a beginning, middle, and end, and at some point, the game is over. Most people play very short games, especially when it comes to investing. What I'm trying to teach you is you really need to move over to the infinite side and play the long game. So a couple examples. We have capital gains and we have cash flow. People that buy a house, sell it for higher, and get a capital gain, that is a finite strategy. People that buy a house, put a renter in it, and generate passive income for the rest of their life and potentially their kids' lives, that is infinite. They're very different strategies with the exact same investment. It's just important to understand that finite has a beginning, middle, and end. The problem is, what's the reward for a good job? A bigger job. You have to replicate everything on the finite side. You have to continue to do it very well, repeatedly, in order to become wealthy. So now let's take a look at high tax versus low tax. So on the finite side, where you're turning and burning, selling property, selling stocks, investing for the short term, you're going to generate a higher tax. That's the way the tax law is set up. On the infinite side, you're actually going to be rewarded with things like depreciation and long-term tax benefits. That is kind of the point. Some of you might be high wage earners trying to offset your income from your W-2 job, which is also, by the way, a finite strategy. Your job itself is finite. If you don't work, you don't make money. Finite would be an hourly wage or a salary, let's say, whereas infinite would be more of a passive income role, where the money would be coming in when you're sleeping. In my case, we call it mailbox money. Now, it's important to understand that these are just strategies. These are just mindsets. You can do whatever you want, but there's no disputing when you buy and sell something, it's finite. And the truth is, there could be lots of finite games inside of an infinite strategy. If your investing philosophy is just finite, then you're going to lose out on all the possibilities of the infinite investing strategies that are available to you. So let me just give you an example between a finite and infinite strategy, where I like to generate infinite return through our investors through buying property and holding them long term. So this is a property that we bought. It was $19 million. We got a loan for 15 and we needed $4 million of equity to close it. It had a $700,000 NOI, which is simply income minus expenses. That's what NOI is. And the $15 million loan had a $400,000 payment, which gave us about a $300,000 cash flow. Now, if you take $300,000 and divide it into the $4 million, you'll see that that's a little over a 7% cash on cash return. That is a good deal. What was really cool about this deal is that it was a 200 unit and we had about $150 per unit value inside of the rent roll, which meant right after we bought it, we could actually raise the rates to market. We weren't trying to raise the rates beyond market. We were just trying to bring the rates to market. All of this was going to take a few years. Now let's get down into the infinite piece. So we also get what's called a depreciation expense, which is a non-operational expense that offsets your income. In this particular case, you got to back out the land and depreciate this property over 27 and a half years. As of year one, you can see that we generated about $300,000 of cash flow, but we reported $200,000 worth of loss. What that means is that these investors in year one got $300,000 of cash, but actually reported that they lost $200,000. That is what I mean by infinite investing. So now let's fast forward to year three, after I was able to raise those rents another $150. So you can see $150 times 200 is about $300,000. So you add $300,000 to the NOI, which now makes it $1 million. So now all of a sudden, this property is worth more. But more importantly, when I add $300,000 to the NOI, my cash flow also goes up to about $600,000. Again, all things being equal, we've got a depreciation of $500,000, and now we actually have about a $100,000 gain. But you can see between years 1, 2, and 3, we still show a negative loss. What would happen if I sold this property today? I would now have a capital gain that I would pay tax. I would lose out on the $600,000 a year in income, and I would have to pay back all of the depreciation that I got from the previous years. That is a finite strategy. So I decided to do a cash out refi, which of course is an infinite strategy. So we went back to the bank. We said, now that we have $1 million in an NOI, what is this property worth? And the bank said, we believe that it's worth about $25 million. And I said, great. So what kind of a loan would you give? They said $20 million against the 25, because now, keep in mind, I've got $5 million of equity, and that's because I had a value add from years 1 to 3. So I take the $20 million of the new loan and I pay off the old loan of 15, plus I return $4 million back to the investors, plus I put another $1 million into my pocket. The negative, of course, is that now I have a $20 million loan. My loan payment's higher. Therefore, my loan payment went up to $700,000, which reduced my cash flow. This, of course, doesn't matter at this point because these investors have received their $4 million back, plus another $1 million. They still own the property, and they have $300,000 of cash flow. This, my friends, is an infinite return. Now, it's important to understand that there are some things that have to stay consistent from year to year to year. Obviously, one of those is interest rates. Another one is cap rates. So there's all kinds of things that have to happen in your projections from year 1, 2, and 3, and 4. So this doesn't always work. Even if you can't do a cash out refi, who cares if you're sitting at $600,000 of cash flow and you got $1 million of NOI? You just wait for rates to go down. So this might happen in year 4, year 5, year 6. It doesn't really matter. The point is the infinite strategy never goes away just because rates go up. So now let's summarize what we've just done. The first thing we did was we increased the NOI, or net operating income, by $300,000. And that was simply by finding a property that had $150 per unit inside of the rent roll that we eventually raised. It took us a couple of years to do. The second thing it did was the value went up $6 million, which is the whole point of doing this thing from the beginning. The third thing is after the banks realized that they had more of an NOI, they could actually place more loan on it. That's how this works. The bank size their loans against the NOI. That's actually what pays back the mortgage payment or the property operation. So the bank gave us a $20 million loan secured against the property. And don't forget, we still have $5 million of equity in there. So the bank's happy because we have $1 million of NOI to pay off any debt. And they've got another $5 million of collateral in case the values go down at this point. So the investors got their $4 million of initial equity returned after just a little over 3 years. Once I return that $4 million back to the investors, they have no investment in the property, but they are still owners. That's a very important point. We do not sell this property just because we've returned everybody's equity, because of course, I am an infinite return investor. I am not a finite investor. Why would I sell a property when I have no investment in it today and it's producing income? That's the madness that I'm watching each and every day with many of you who are buying things on a finite strategy. In addition to the $4 million of equity that was returned, there was also another $1 million of profit. Here's the cool part about that. That $1 million is also tax-free. And you might ask why? Because this is a cash out refi, just like you do on a house. When the bank gives you $20 million, it's in the form of debt. Even though I returned it to all the investors, they got their original $4 million plus another $1 million. That is tax-free too. So at this point, these investors have generated about $1.2 million of cash on a $4 million investment, all tax-free because of depreciation. And I gave it all back to them in year 4, plus another $1 million tax-free because of the cash out refi.